I'd just like to thank everybody for coming out today, and actually quite surprised that there's this many people given the Denver Gold Show and the SEG and Whistler. But thanks for taking the time to come out. My talk will be largely, to a degree, a bit of doom and gloom. How did we get here? I mean, let's face it, it's not pretty out there. But there is some light at the end of the tunnel, and hopefully we see a turn soon. I know my wallet could use it. So some of the negative, or some of the reasons why we're in these negative markets, they've been, well documented. I don't necessarily have the answers to it. The linkages perhaps to the downfall of the American economy to some degree, and the linkages to the Fed and their buying program. The gold market conspiracies, a la Eric Sprott, to the downfall or the potential downturn in Chinese building. This led to what was a frothy industry now has become sort of bloated. Companies have been forced into spending crunches in what is inherently a capital-intensive business. This has led to a lack of spending on the ground because people aren't able, or companies aren't able to raise the funds necessary to advance their projects, which leads to a lack of news and a lack of discoveries, which adds to the negative sentiment of the industry as a whole. Some recent happenings related to this is that companies are now forced into very dilutive equity financings, which may lead to scenarios where there's rollbacks that could potentially be rampant, and I would argue maybe healthy for the industry. Another negative trend that I'm seeing, and one that I don't like, that John lamented on, is some of these companies taking on premature debt. There's no signs of cash flow for some of these companies, and like John said, the lenders, they know full well what they're doing, and great if the payments are be able to be made. Great, they made some money, and maybe the project and the money that they received as a portion of this debt financing was able to advance it significantly enough that they now are in a cash flow scenario. But more than likely, the assets could be potentially seized by these lenders, which I'm seeing more and more potential for that to be happening right now. Some real negative points about the mining industry that I think prevents the broader public from getting back into the mining industry. Unfortunately, some of the things that I see that really sort of burn me are some of the unwarranted and large bonuses that are cut to directors and management without having much real achievement for the company. And then coupled with that, those that do experience success and the bonuses are well justified, there's a fundamental lack of bonuses to the lower level people, project geologists, people that maybe even came up with the ideas to be in certain areas but aren't necessarily management. They're stuck in a position, even though they're key and critical, they play critical roles for these companies, where they're not really incentivized to be around. So these people could be disappearing at the drop of a hat simply because they have no upside at being at the company aside from a paycheck. Another negative point that John really brought out was cross-contamination, as I'd like to call it, between public and private companies. In particular, some of the things that I've seen in the past are where there's a related private company that does the work on behalf of the public company, essentially filtering public funds to a private company, and then which in turn dividends out management fees to essentially the same people that manage those public companies. While this is a gray area, and I understand that, it does effectively take away from maximizing the potential money that should be spent in what is the most important thing, which is advancing the mineral properties. The other point on this is seeing an increasing trend in this as well, where there's a private company that is related to the public company, and they'll stake a bunch of new ground and vend that project into the public company and cut themselves in that private company basically a bunch of money and shares in that public company. I think these are negative points that should be avoided for a lot of public companies. I'd certainly shy away from investing in them anyways. It's inherent to our industry because the group is so small, particularly with the junior explorers, that there is a broad overlap between directors and management. However, I would like it if there was more separation. It seems to me that there's an awful lot of directors that are having say in the day-to-day operation of the company. This currently, all this, along with the macro perspective, has sort of led us to a scenario where if I was to invest in a brand new company that I haven't been introduced to before, I've got to be prepared to go all in, which means that not only am I buying on the market currently to gain that position where I gain favor with the company and I can take a placement, but I also got to be prepared to buy more and more stock that from other houses where the current shareholders are just disenfranchised. And really, to be honest, I'm not willing to stick my neck out like that in these markets. I guess the next point I would like to get to would be, as a geologist, I sort of often contemplate what is the business model of an exploration company anyways. I think the fundamental business model is to be able to find something that's either going to be bought by a company that can put a mineral prospect into production, or ultimately maybe you can raise the funds and produce this yourself. From a lot of the companies that I see roll through the door, and this isn't all of them, but there's a large portion where I really feel like they don't have a grasp on this, and if they do, they certainly don't employ the people that can take them over the top. And fundamentally, sometimes they just don't have a real understanding of what it is they're exploring for, which leads me to not be incentivized in investing. So again, this is not all companies. There are some very excellent companies out there that are doing great work on great projects, and the fact of the matter is this is industry destined for failure on a company-by-company basis. Most mineral properties just aren't going to work out. That's the way it is. And you've got to be prepared, in my opinion, to cut your ties with projects when it's not working out and be prepared to move on. Sometimes that means rebranding the company. In other cases, maybe a complete rollback and just starting again. It's fine. It's not a bad alternative. So currently, what we're seeing is spending cuts, and this is across the board, from juniors all the way up to the majors. I'd like to see, and maybe we're going to see this, is more mergers with other juniors and senior mining companies, which shouldn't be viewed necessarily as a bad thing. Selling your company or prospect that you deem to be of high quality, many companies are not in a position to significantly advance them at the moment, and potentially acquiring shares in a company that could potentially develop this in the future is not necessarily a bad thing, and we can all take advantage of the ride up in the future when the markets do turn. So that's the doom and gloom, I guess, but I'd like to say that all is not lost. These down cycles are natural and healthy, and it's not just inherent to our sector, it's all sectors. What it might take for a turnaround, I don't know. Maybe the destruction of other sectors where there's money flowing out of other sectors into this one. I don't really know what it's going to take or when it's going to happen. But there is a light at the end of the tunnel. For instance, recently we've been seeing, and it's just a brief snapshot, but hopefully it's a sign of good things. But since June, there's been an ever-increasing trend in higher lows and higher highs in the venture exchange. And the volumes have been picking up, although not substantially. These are pointing to potential momentum builders in a positive direction. That coupled with a little bit of positive or perhaps unanticipated more positive news coming out of China, which is reflected potentially in the recent Australian dollar relative to Canadian going over its 100-day moving average. So Australia does primarily their business with China. So that supports the fact that maybe China is a little bit more, or strengthening more than we give credit for. Yeah, I was going to go through the key criteria that I'm looking for, but sort of skip on that and keep it short. But I think that we're in a situation now where it's a unique opportunity, both from an investor's point of view and the actual companies doing the exploration, where they can acquire properties for a lot cheaper than they could otherwise. And this ranges from green fields to brown fields to currently producing assets that could position them better for the future, as long as the spending in the current times isn't too high. So I encourage you to keep plugging away out there, as things will turn, and it'll be bright for everybody at some point, hopefully in the near future. Thanks.